Hi, this is Kyle with the Option Sherpa, and I wanted to go over today with you guys Intel and Amazon. We have Intel in our focused income portfolio, and I'm going to swap it out today with Amazon, and I just wanted to walk you through why really quick and what it looks like technically and kind of how I go through this decision process. So, first of all, I have Intel pulled up here on my screen. Just kind of by chance, I've been watching Intel for the last few weeks. Intel is at the exact same price that we purchased it at. We've made money on the options, so we're making money, but the premiums in Intel have really dried up since we first got it. I really like these premiums to be close to 1% or more per week that we're writing. So if the stock's $20, I would like it to be a 20-cent portfolio or 20-cent premium. If it's $50, I want it to be a 50-cent premium that we're writing each week to give ourselves a shot at a 3-4% option premium each and every month. So what I look at here is a couple things. There's a kind of a lot going on this screen, but I'll kind of explain it to you guys. What we have is Intel's just kind of been rolling around. It fell hard as soon as we got it in here. In January when the market fell, it fell. Our option premiums helped save us on some of that loss, but it still wasn't great. We had a nice little bounce right here. Something I want to show you guys is you see this. These are the Keltner channels, and these pink lines. This is the lower band, this is the upper band, and this is the average range of the Keltner channels. Whenever you see a close below the Keltner channels like this right here, that is a bullish sign. You would like to wait for confirmation, but when you can see that this candlestick right here closed below the lower Keltner channel, and then it rallied hard ever since then. So that's something when I'm looking at stocks and I'm waiting to get into them, that if I see that, I really get interested, and I want to see if I like the stock, make sure Jeff likes it fundamentally, and then we kind of want to pounce on that if we do see that. We got great confirmation on this candle, and then it's soared ever since. But right now, Intel's kind of getting close to its upper band. It's still in an uptrend, and what I consider an uptrend right here is this green line right here is the 50 exponential moving average. So the 50-day moving average. This blue line is the 100-day exponential moving average. So whenever the 50 is above 100, I consider it kind of still in an uptrend. When these things cross over, then I kind of think that things are changing. I wait a few days for confirmation, but in general right here, we have the 50, the 100, and I even always keep a 200, which is the red line up here. This is a 200-day moving average. So all of these three stack up right here, and so it's still technically in an uptrend to me. But because the premiums aren't great, I know there's better options out there to go get, and so I'm going to replace it in the focused income portfolio with Amazon. And let me actually just show you, before I jump to Amazon, let me show you the premiums on Intel right now. So right here, this is 8 days away, so this is for next Friday. The 25.5 strike price is current bid is 17 cents. So that's not close. I would like this to be 25 cents to get to our 1%. It's not there. It's been like that for a few weeks now. It's kind of bugging me. Intel throws off a great dividend, so it's still very appropriate for the enhanced dividend portfolio. But for focused income, we're a little spicier over there. We'd like to kind of give ourselves a chance at maybe some bigger returns, which comes bigger risk. But I want to see a little bit higher premiums than that. So let's jump over to Amazon. And we'll look at the chart first. Now, a couple interesting things happened here today. One of our subscribers, Clint, actually sent me a really good email last night on a news announcement that they had. And they also sent out a special news announcement for, I believe, April 2nd, that they're going to come out with something. But there's a couple things here. There's three really bullish things in this chart that happened today. And I will wait for the morning. This is a Thursday night. I'm going to wait for the morning to see if we confirm. But there's a couple things I really want you guys to pay attention to. The first is right here, it closed below this Keltner channel, which is what I told you I like to look for. Whenever you see a close outside of this lower band, it's very bullish. You see a close outside, look at this, you see a close outside this upper band, it's bearish. So this is something that we either want to watch to for a big leg up or a shorter term leg up, but it's definitely something to watch for. So the first thing is it closed below its outside or its lower Keltner channel. The second thing is that it bounced off this 200-day moving average. Now, technical indicators are important if people follow them, and many people follow the 200-day moving average. So you can see that these stocks tend to bounce off these moving averages. Right here's a good example. The 200-day is it closed below it, closed up above it, closed below it, and then it took off. Is that stocks really, that's really support or resistance, and in this case it's strong support right here for the 200-day moving average in Amazon. So the first thing is it closed outside the Keltner channel. Second thing is it closed right on the 200-day moving average, so I expect a bounce. The third thing is this candlestick right here. These are called candlesticks. This is known as a hammer. Hammers usually mean change in direction. So this has kind of a bigger hammer top up here, so I'll be watching it. But what I want is let me blow this up for you guys. I want Amazon to break this level tomorrow, right here, this top of this wick right here. I want it to break this level. I would expect it to jump up to this 100-day moving average over the next few trading days if it does that. So that's just kind of a little technical lesson, but I really do like Amazon right here just because of these three bullish things that took place today. Coincidentally, a lot of stocks made bullish candlesticks like this today, but Amazon closed below the Keltner channel and it closed right on the 200-day. So for it to fall below this, there'd have to be some negative news. I think this sell-off in Amazon, based on the news they came out with this week, what they're expecting to announce next week, and what they've got going on, I just think this is a little overdone. I think this is this sell-off, a 10% drop is definitely overdone for Amazon. But stay tuned because we'll watch it. So we're gonna throw this one into the focused income portfolio in the morning. Another thing we want to look at is, let's jump over to the options over here. Now you got two options on Amazon. Amazon's a really expensive stock, so if you buy 100 shares of Amazon, you're looking at $33,000. That's what we call portfolio killer for a lot of people. If you can do it, if you got the portfolio to buy the straight up 100 shares, 200 shares in 100 share increments, go for it. But especially in the focused income portfolio, it's a lot of our subscribers starting out, and so they give us a really good option with these mini options right here. So a mini option, instead of having to own 100 shares, we only have to own 10 shares. So instead of spending $33,000, we can go ahead and we can spend $3,300, and then we can write options on that. But one thing I want to point out to you guys is this is just a little mini option lesson. Apple has minis, Amazon has minis, Priceline has minis. The bigger stocks, the higher price stocks have mini options. But one thing to be cautious of is right here. We got the bid and the ask. Whenever we're going to sell a covered call, we're going to sell it at the bid right here. So if I click on this, it immediately jumps down here, and I know I want to sell the 340s. This might change in the morning, so this isn't the trade, but this is an example. If I sell the 340s for $4.05, well, what do you notice here? $4.05 for the bid, $7.10 for the ask. That's a $3.05 spread, which is really big in my opinion. Now, I don't like trading things that have this big a spread, but we don't have to accept that. Rookies have to accept that, but Option Sherpa subscribers do not have to accept that. So what we could do is you go down here, and this is just for the Thinkorswim platform. It works in any platform you guys are trading. It probably doesn't have the slide scale, but I'll show you what to do. So right here you got 405, and basically they're saying the mid price is 555. I want you guys to test it. Like in Thinkorswim, I want you guys to slide this over to the mid-level, 555. You can even go, and you see it change right here. You can even go a little higher, and I want you to submit it and see if you get it, and you probably will. I almost always get the midpoint price. So instead of getting $4, we're going to get over $1.50 more if we slide it over to the mid-range, and you'll get filled like that. So that's something to notice on these mini options is the spread is a lot bigger, and I'll show you an example right here. This is the regular 100 share non-mini options, and we got 585, 620. So that's only a 35-cent spread, which is really not that big a deal for something that's priced at $338. But even then, you guys can click on that, come down here, slide this sucker right here, get it right here in the middle. If you don't have a sliding rule, know that you can put it in maybe around 590, 592 maybe, and you'll get filled. And just wait a minute. Those market makers are waiting. They know you're anxious to get it. Wait a minute, and I bet you get filled. So if you have questions on swapping out Intel for Amazon and how I look at it, just go to optionsherpa.com, send me an email, and I'll get back to you. And other than that, have a great day.